A big part of what we do here at Franchise City is to help candidates obtain appropriate financing for their given situation. And just like there's no perfect franchise for every single person, there's no ideal financing for everyone either. Everyone has a unique set of circumstances, future business plans, equity, credit score, and it's very important that you get the financing correct for your situation. I'll give you an example. If you plan on opening multiple units, like hair salons, for example, the financing is going to be different than if you're only interested in opening a single location. And we've seen people actually unable to open a second location simply because they didn't finance the first one properly. And with the right financing, you can open up these new locations in rapid succession while maintaining sufficient operating capital to run your business. Now, there's too many scenarios to get into in a short video, so today we'll just take a general look at what type of financing is available for your franchise. So there's several loan types that are available, and it's possible to finance up to about 85% of the total loan in certain situations. So we'll start off with the SBA loans. And SBA stands for Small Business Administration, and these loans are actually partially guaranteed by the government in the event of a default. So the banks obviously are much more forthcoming with money with these SBA loans, as they know they're going to get part of their money back if you default on the loan. So an SBA Express loan is for smaller amounts up to $350,000, and the loan's going to take about 30 to 90 days. You'll usually have an answer back in 36 hours. Now, for up to $150,000, you'll require about 685 for your credit score. You may not require any collateral, have a cash injection of 10% with 20% cash reserves. Now, the terms are usually 10 years for lines of credit and working capital or leasehold improvements. Occasionally, you can negotiate longer terms for equipment or furniture up to 25 years. Now, express loans that are between $150,000 to $350,000, you're going to need collateral. Those amounts are going to vary. You're going to require between 20 to 30% cash injection with 20% cash reserves. Now, with the higher amount, you're also going to require a business plan. Your funding is going to take 3 to 4 months. And many people are surprised when we tell them, hey, it takes this long to buy a franchise, but there's a lot of research required as well as coordinating all this financing and going through the red tape. So SBA loans are great, although they add this additional layer of red tape and are going to take some time for approval. Now, another option is an unsecured line of credit. And here, you're typically going to need a credit score about 700 or more, no collateral, cash injection, or anything else required. Amounts are usually between $20,000 to about $120,000, depending on your situation. It may not be a fit. Now, your lender is going to help you understand the implications of all of these different finances and advise you on the best route to go. Now, for veterans, there's some great options, and you can also tap into your thrift savings plan, which can also provide advantages. We're going to discuss that next. But with traditional lending, veterans who have a 685 credit score can negotiate up to $150,000, no collateral. You'll need to put down only 10% with 20% cash reserve. There's a lot of other incentives and discounts we have available with many franchises here. Give us a call for details and we'll help you find what's available in your location and suitable to your skills. Last up, we're going to discuss the ROBS, or the 401k rollover. This is a fantastic option if you have a 401k. So the ROBS allows you to leverage your 401k and invest in your own franchise. And there are major tax advantages here, and depending on your state tax rate, could be substantial. So if you were to withdraw the money from your 401k, eventually you're going to have to pay applicable taxes on that money when you withdraw it. By investing that money in your own business, your franchise, you save that tax amount. So in essence, it's almost like the government paying up to 30% for your business. Now, you can use as much as your pre-tax funds is required. You can combine multiple accounts, and funding in these cases is typically a lot quicker, about 3 to 4 weeks. Now, there's other benefits, such as having the ability to draw a salary when you're first starting your franchise, which can take the pressure off having to take money out of the business, especially in a startup. That can be a pain. Now, there's costs involved setting up this type of financing, as well as ongoing expenses to manage your account. So be sure that you understand the implications and work with a company that has experience in doing these rollovers. Now, in certain circumstances, you can combine leasing into your startup costs depending on the type of business and equipment involved. And if you're leasing, there could also be substantial tax benefits through the Section 179 deduction, where you can actually deduct up to $1 million for certain equipment expenses. Now, if you'd like to have franchise experts guide you through the acquisition process, including consulting, financing, and all else that's included, you can learn more about our free service by clicking the link above or below, depending if you're on mobile. Please like and subscribe. Thank you very much for watching.